Good morning, everybody. It's Eureka John from Eureka Street Crypto Hub, broadcasting live on float.app again for the second time this morning. I'm doing a double header today. I broadcast every single morning. This is part of my morning show video blog covering every single thing that I'm learning in crypto because that's what I do. Good, bad, and ugly, raw, beautiful. I put it up there just so you can see that we are all just kind of finding our way in the dark in this place, in this crypto wild, wild west. And I don't have all the answers, but I'm searching for the answers. And today is a special day. I have a guest with me today, and it is Dan Thomson from insurace.io, and it's the decentralized finance insurance project that's come about. And right now, I believe there's maybe 3 or 4 of them, but we'll have him clarify all this stuff for us. But this is what I love about the crypto space, is learning something new. And when you think you start to have a handle on stuff, then something new pops through your Twitter thread and you're like, oh, okay, all right, I guess I got a lot more to learn. And so that's just kind of how it is. And so Dan has been gracious enough. He's in Lisbon, Portugal right now. So if there's any background noise or anything like that, wind, whatever, it's fine. It's just the way things go whenever you're trying to work on a busy schedule. And he's at that conference in Lisbon, and I'm getting to kind of live vicariously through him right now and getting to see what's going on there, because I have some other friends over there as well with the MGH DAO and the Bankless DAO and some other people. So I want to say hello to Dan here, and he is the marketing manager there, the head of marketing at insurace. So I'll let him introduce himself here.
Yeah, thanks for having me, John, and hi everyone. I'm Dan Thomson, the CMO, Director of Marketing and Business Development at insurace.io. Yeah, as John said, I'm calling in from LisCon, which is the Lisbon Crypto Conference, as part of Lisbon Blockchain Week, which is an extremely busy event, which is why I've had to step outside and run across the street to try and find a good spot to do this, only to find out that it's a little bit windy today and there's trains and everything running overhead. So in full European style, almost reporting live from a location. Really, very great event actually. But no, it's going to be a great week. There's loads of people here, loads of fantastic sort of DJs I keep running into, and yeah, it's just a very busy event with great speakers all week long, and loads of and arguably relatively about 10 to 1 drinking events to actually daytime events. But it should be if I can survive the hangovers, it should be a very, very good week.
Nice. Yeah, I almost feel like you're kind of the DeFi correspondent on location, reporting from the scene.
It feels like it today. I've actually, I knew this was coming out, so I've actually tried to avoid the 5 drinks that have already been offered to me. But no, it's been fascinating. Honestly, there was the Taoist event yesterday. So you were saying about your friends at the Tao, DAOs, they were all there yesterday, which is a really, really interesting event. Today, LisCon, lots of ETH guys, lots of great projects all around, and just a packed out event. Some great speakers, great exhibitors, and it's going on all week, and it's just it's really nice to be here.
Nice. Yeah, so I see you're wearing the insurace.io t-shirt. And right there, that's it right there. So if you go into any search engine and you do insurace.io or just insurace, you'll find it. So I want to hear a little bit about yourself and how you got in a little bit into crypto and then insurance. Like, how did you get into the insurance side of all things? Because to me, it's I'm not gonna lie, insurance is not the most glamorous topic when you talk about things. But it's, to me, kind of a necessary evil. And I would think in DeFi, like something had to happen to make somebody say, you know what, we need insurance. I wonder if there's anything personal or if that's just something that you kind of found interesting and want to help people out with.
I mean, obviously it's a rite of passage to at some point lose some money in crypto, right? So this just addresses one of those points. But no, myself, I bought my first Bitcoin about 6 years ago. Very, very lucky. I got it locked away and called it my future boat fund. The rest of my crypto involvement really started around 2017. Got a lot more heavy involved. Launched an index fund based out of Gibraltar, which is great. It's a private fund, and then COVID happened, so it closed a couple of my other businesses, which was very unfortunate. But I decided to go full nomad and start traveling the world.
Oh, cool.
Along the way, got a bit bored, started looking up some projects to get involved with again, and it came down to two or three. One of them was insurance, and just looking at the addressable market, it's just so exciting to get a part of. I mean, it made sense to me straight away. Financial insurance in this space is has such huge potential, and it is such a requirement. I mean, even now, on average, there's something like $100 million hacked every single week.
Wow.
If you break down the hacks over the last sort of 6 months, so it really is a substantial amount of money lost on a week-to-week basis. In a total of what is now currently probably as of a new all-time high today, so probably smashing through the $200 billion mark locked in DeFi right now. Less than 2% of that's actually covered through any form of insurance. So the addressable market there is enormous, and it's that sort of risk mitigation that the big institutions, big companies, big individuals will need to come aping into the space. If they know that their funds are secured, locked into various protocols, if they know that they're covered against hacks and bugs, then they know that their funds are safe. And so one of my favorite examples is Anchor on Terra, which is essentially a stablecoin project, giving out roughly 18%, pretty much fixed rate return. So you're getting 18%. The only real risk there is if they get hacked. They've got the fixed return. It's all locked into the smart contract. It's all safe as houses except for the risk of the hack. Now, for that, so we provide insurance for that particular project for about 2.5% a year, which means that for just that small cost, you're getting a fixed guaranteed return of 15.5%, which in the modern market, with all the sort of nervous what we're heading into the next year or two, is pretty much gold dust. I mean, try and get anywhere near that as a guaranteed fixed return in the traditional finance right now, and you'll get laughed out of any shop. So that insurance is a vital part of that to allow bigger institutions to come into the space safely.
Yeah, it's a very small price to pay for that type of security. And especially now that Bitcoin has the ETF being approved, who's next? It's probably going to be Ethereum, and that will add another, I guess, bull charge for Ethereum. And a lot of institutions are getting involved. But yes, DeFi is the Wild West, and it's that crazy space. And in banks, you're lucky if you get 0.1% yield in any type of savings account. But you're targeting more institutions or individuals, or a little bit of both, or does the program kind of flex depending on who you are?
So there's no real flex. It's the same sort of annual premium for everyone because it's all on chain, so it's all fixed into the smart contract. So even though we do have a referral program which can allow you to get 5% reward for anyone you refer to us, and allows them to get 5% discount on their insurance premium. That's about it, really. We don't do discounts for longer terms, so for like 6 months or a year. So if you buy insurance for just 1 month, it'll be the same premium rate as a year. So say it's 2.5% for the year, that works out at 0.2% per month, which when you put it like that, sounds like an easy win to protect your assets.
Yeah, for sure.
We target pretty much everyone, really. So anyone can go on through our app and buy their insurance coverage. And the beta, so that's mostly B2C side, but the B2B side would be that we also do speak to a lot of the protocols we partner with and offer them the option to insure their own treasuries and insure their own stake holdings within their own apps. So that is something we do that is a B2B side, but otherwise investors, institutions, everyone else would go through our app using a wallet. We don't do any KYC, so it's all directly done through the app, through the protocol, for people to protect their assets to the level that they wish to be protected.
Okay, so that was my next question about KYC. You really can't tell if somebody's an individual or an institution from your end or from the protocol's end, right?
No, so we have a nice little bot that tells us on Twitter and on our Telegram group how much comes in. So like one morning I'll wake up and there'll be like a sale of about 3 million worth of cover, and I'll just be like, yay, well, well done us. But whether it's an institution or individual, no, we don't tell. We can't tell.
Oh, that's cool. Yeah, and then some of the competitors like Nexo Finance, they do KYC, right?
Yeah, Nexus Mutual does KYC.
Or Nexus Mutual, yeah.
There are some. yeah, there are some solutions coming around to that. Other protocols, Bridge Mutual, Unslash Finance don't necessarily need KYC, but and some of the ones that are soon to launch don't. But most of the other, so there's four main ones out there really at the moment. Cover were there, but Cover decided to sort of pack it in. The other insurance protocols coming through, everyone's approaching this market in a different way, and there's such a huge addressable market. I don't think any of us really see it as competition. It's more of like a collaboration. We're all approaching it with different solutions. So, one solution may be better than the other, but there's just such a huge market. It's all required there to work together to try and like fill the space and make DeFi a safer place.
Yeah, yeah, that's kind of the message I try to convey, as far as people saying that there's Ethereum killers and all these different competing DeFi platforms and stuff like that. I'm like, there's really not, when you think about the scope of where we are right now in the space and how early we are. To people like you and me who are in the crypto space all the time, it seems like everybody's in it, and you're at a crypto conference right now, and everybody you're around right now knows about DeFi and crypto. But when you go out into the general public, you realize you're speaking a completely foreign language to these people to even mention DeFi.
Yeah, unfortunately, it's still the case. So we'll get there, but yeah, I mean, even when my friends ask me what I do, it's kind of like I'm like, what's your level of crypto understanding? And they might say, oh yeah, well, like Bitcoin or like Shiba Inu, and I'm like, well, yeah, sure, why not? And it's nice to try and explain why it's important and why it's coming through. And I think there's just a lot of information, a lot of like confusing noise out there that sort of distracts from the main reasons for doing this. But at the end of the day, you're right. It's all collaboration. It's all working together to to improve the world we live in the real world. I think before like you said before, there's an ETH killer. I
Mhm.
think multi-chain interoperability will be the main solution here. I think it won't be a case of one chain being better than the others. You know, different chains are different and better for different reasons.
Mhm.
But there's no one that's the ultimate chain. It's just a case of they will end up working together, and the multi-chain solutions will be the thing that really drives it, that can use the best parts of each chain.
Yeah, yeah, and I could see that happening within the DeFi industry and even within insurance protocols as well. Different insurance protocols specializing in certain types of sectors as well. For instance, somebody may need that KYC, and that Nexus
Yeah.
Mutual provides. So it could kind of
Yeah,
complement each other.
absolutely. And then, so between even ourselves, we're now deployed on four different chains. So we're launched on Ethereum, Binance Smart Chain, Polygon, and Avalanche.
Mm-hmm.
We've built our own proprietary bridge, but at the same time, in the future, we've been speaking to a few bridging solutions here actually at this conference, and it's great because we're actually working on a bridging insurance as well. So
Mm.
these different bridges that are working on making it easy for users to connect between different ecosystems. We're actually going to be providing insurance against any risk that comes with that.
Mm-hmm. Yeah, I actually have stuff on the Polygon network and on the Binance Smart Chain network, the Insure tokens on there, and I just was kind of playing around and testing it, and it all works swimmingly. So, um,
Thank you very much.
yeah,
Our tech guys are based in Singapore. Honestly, they're one of the best tech development teams in DeFi at the moment. They're super fast. I mean, they're faster than any tech guys I've ever worked with. They do not give me any time for announcements. Things are done months early rather than most times you plan things and there's delays, everything else. No, but these guys, honestly, we plan things for like next month, and then 2 days later they'll be like, okay, it's done now.
nice.
Time to announce it, and it makes my job very, very fun but very difficult.
Yeah, very fun but very difficult. I like that. Okay, so there's two ways to invest in Insurace, right? So you're a staker, and then you're an investor, and both of those kind of work together. I was trying to understand that graph, and I believe in my video that I made, I guess about a month ago now, I was having a hard time understanding where in the website the investor side came into play, but I looked back at it again and I realized that part is still under construction. Am I correct about that?
Yeah, exactly. So the investment side, we're waiting on a few KPIs to be hit. So, for example, we've listed 80 plus protocols now, but after we hit 100, that's one of our KPIs to launch our investment protocol, because the investment arm basically uses up sort of capital that's idle capital. So it's capital that's sitting around waiting. and then we can then use it to reinvest, like any traditional insurance company does, use it to reinvest to generate higher returns and income for the business, and higher returns, which will help bring down premiums and help to reward our token holders.
Okay.
So that's not out yet because we're still waiting to hit those KPIs, but we should be launching that fairly soon. Otherwise, yes, we have the token, which you can invest in, which can be used for staking, rewards, and other benefits, soon to be used for payments as well. And also we have our staking options on each of the chains, so on Ethereum, Binance, Polygon, and Avalanche, which for staking, you can get up to 86% return at the moment on Avalanche. I think Polygon's got something slightly higher. And we've got liquidity mining with Uniswap, SushiSwap, and Pangle Index. So those can get up to 150% returns APYs on liquidity mining.
Pangolin's on Avalanche, right?
Yeah.
Okay.
It's on Avalanche, yeah.
So, okay, now here's a newbie question. SCR, solvency capital requirement, is that what that is?
Yeah, so that's basically, we try to actually. Sorry, there's just at this restaurant now. They've whacked up the Mexican music in the background. Today is not going well.
It's okay. I can hear you very clearly.
Okay, fine. It's killing me though. So the SCR is basically a minimum requirement of cash that we have to cover the eventuality of any claims. So we decentralize our own risk by obviously operating on 4 different chains, as well as then opening up to different protocols on each chain, which means that no one protocol can have more than 20% of the total available capacity and risk on that chain. So the SCR is basically there to cover a bare minimum of, in the event of one of those protocols, or at least 5 of those protocols having a full payout.
Okay.
The SCR is the minimum cash we have to have available in our protocol locked in to be able to pay out that return. Everything else is sort of essentially, available cash to be reinvested. But the SCR is there that just in case we do have a big sort of black swan event of 4 different protocols hacked at the same time, having to pay out, we've always got the liquidity there to pay out those claims if they're accepted.
Okay, so that's kind of the assurance for the policyholder that you guys will actually have the money, and that's what the SCR is.
Yes, exactly.
Okay.
And it's all on chain, so it's all provable that we have that capital if that were to, touch would never happen, but just in case it were to happen, we have that liquidity available.
Yeah, that's good to know. And so the SCR mining, I saw the protocol adjust the SCR limit up or down based on some certain parameters. And so the mining portion of it, does the rate that you get back when you put in tokens to mine fluctuate based on some conditions, so that you're mining the excess capital above that SCR line? Is that what that is?
Yeah, so by staking with us to mine obviously reward tokens, it does fluctuate in terms of the APY you're achieving for the staking. It doesn't fluctuate too much, which is great, but it does fluctuate up and down depending on the capacity of that particular pool at the time. So depending on how much capacity we've allocated for each protocol, for each chain, does affect how much return you can get by staking with us to provide that underwriting SCR. Yeah.
Okay. And then when people are doing the investment portion of it, the investment proceeds go towards that?
Yeah. So once that happens, I mean, eventually the way decentralized insurance will work is through enough protocols listed, enough customers buying in, essentially enough capital coming in, generating, will decentralize the risk between the different protocols, between different users, between staking, between investors, and it really decentralizes everything. But that available investment returns that we work with our partners will also generate sufficient capital to actually reduce the premiums, as well as provide returns for our investors on a whole.
Cool.
So that's where the investment side comes in, because it's essentially generating extra revenues from capital that sat there. And there is also an algorithm that you can work out, whereas, I mean, it's not even really an algorithm, it's just a bit of common sense. If we stake with different protocols where we can actually get back that liquidity quicker than we need to be paying out for our insurance payouts, then essentially it's still available capital we can use to pay out claims.
Okay, cool. Yeah, I'm starting to wrap my head fully around this. I appreciate you explaining it. Let me reel it back out here a little bit and to kind of look at the industry as a whole. um, I said before, insurance is kind of a necessary evil. Do you ever see a point, and especially now that the institutions are getting involved and that the government is starting to become cognizant of a lot of I mean, I'm sure they were before, but even the politicians now are starting to wonder about DeFi and stuff like that. Do you ever see insurance kind of being mandatory in this space?
It's an interesting one. Mandatory is difficult because individual countries might say that you need to purchase insurance with any financial regulation, but then the insurance companies themselves face their own version of regulations, which are extremely complicated as well. So we are always keeping abreast of any updates in terms of regulations and between different countries as well. So, but on a global scale, it's very difficult, and crypto is obviously a very, very global thing. So to stay ahead of that and actually keep up to date with which countries require which does take quite a lot of monitoring, but it's something that's constantly evolving, constantly adapting. And we're very transparent about the entire process and where we have to, if and where and when we have to be registered. So it is complicated, but the honest answer is no one really knows at this point.
True.
DeFi insurance is about as far down the rabbit hole as you can get.
Yeah.
So it's I think the SEC is still like clamoring over ETFs right now. So we're about 10 levels down from that.
Yeah.
So we've got a bit of time to wait.
Yeah, maybe I am ahead of the pace a little bit, but like I said, we're completely absorbing our worlds in the crypto space. So, all this seems normal to us, but to somebody who's a normie,
yeah, I mean, honestly, right? It's and you said it before. It's not the most glamorous thing to talk about, but we try and do our best. It's about securing assets, and all the hacks do sort of tend to exemplify like the reasons for it. And the best way I like to say is, every protocol at the moment when they launch, it's like a dumb thing that they have to get an audit and they have to do a bug bounty.
Yeah.
But even then, with the best teams, with the best audits, even with like 4 or 5 audits, some of these protocols are still getting hacked. So the only real way to mitigate that actual risk is through insuring your assets. And this is for the people who care about that extra couple of percent. A lot of people just want as much gains as they can get without thinking about it. But it really is for the sensible investor, and especially for financial advisors operating on behalf of other people's money. It really will be a game changer in terms of how you invest in this industry.
Yeah. I mean, Compound, was it like a week or 2 ago? They had a hack. Did you guys have any?
Exactly. Not yet. We haven't had any claims come through yet. We do cover Compounds, so nothing just yet, but we'll see.
Yeah.
I don't think we're going to get any, but again, it just highlights more and more like the need for this in the space, and what we will get to in the future. Like I said, at the moment, it's like the dumb thing that every protocol has to get an audit.
Yeah.
In the future, like one of those big investor questions will be, do you offer insurance on your protocol before we invest?
Yeah, I mean, that could be the condition based on grants, investment grants, and I don't know. I see it becoming some kind of mandatory thing. However, if maybe obligatory and mandatory can have a subtle nuance of difference. Obligatory meaning you probably won't get approved for stuff, but mandatory meaning coming down from a government agency or some kind of regulatory agency. Now, I think mandatory could probably mess with the free market aspect of it all, where obligatory might not.
Yeah, I mean, I just go down the route of common sense, really. I mean, you're looking at DeFi returns, 20, 30, 40, 50% or more. I mean, hell, you look at some of these DeFi 2.0 projects coming through with like 7,000% returns. What's a 2.5% insurance cost really gonna set you back?
Yeah. I mean, okay, so how far out do you go on some of these DeFi platforms? Because I've completely been guilty of doing some stupid degen moves on Polygon and stuff like that with 100,000 APY just to try it out, and of course I lost my ass on it,
Yeah. I mean, that's it. I think, like I said earlier, I think it's just part of the process. You have to go through these things to try it out. I'll dip it every so often. I'll take a punt on something, but no, I've got a fairly stable investment plan. So I'm not too I like sleeping. You know, I don't want to risk. I like travel. I like sleep. I don't want to be sat waking up in the middle of the night wondering if whatever protocol's been hacked.
Yeah, yeah. So how far down the stupidity platform will Insurace cover?
So that's one of the good things. We do actually perform really quite high quality, like mini audits on each protocol we list. So we actually reject about 50% of the protocols that we look at.
Oh, that's good to know.
So the protocols we do work with have to like have a good community, good TVL, good founders, or a good team that we can speak to. Good activity, good volume, and we actually have to see a purpose. Our tech guys who do the research into each protocol are very, very, very strong developers. So they really do a deep dive on each of them just to make sure that they are good for us, good for the users, good for the protocols themselves. And yeah, so we do really make sure that everything's okay.
Right on. Okay, well, I mean, I think we're pretty much at about time. I'm gonna put on my outro music, but as I put on that outro music, is there what are some links, Twitter handles, and things like that you and how to get a hold of you and all that stuff? Pitch it all out there.
Yeah, absolutely. So it's just insurace.io. So insurance with no N. Find us, all on insurace.io. Find us Twitter, Telegram. Join our communities. We do regular events for our community, regular airdrops, regular nice touches to keep people engaged. Personally, you can find me as Vagrant Crypto on pretty much every channel. And I mean, our team is very open and honest. We're always on all the channels. So if you ever have any questions, please do hit us up, and we'll be happy to follow up with any comments and questions.
Okay, Vagrant Crypto, I'm going to follow you. Okay, right on. All right, well, thanks so much for carving out a little bit of time. It looks really fun. I wish I were there in Portugal. I've never been there, but I've been all around there. So nice. Well, you enjoy the rest of your evening.
It's been my pleasure.
And thanks again.
Thanks a lot. All right, speak soon.
All right.